All right, everyone, we're going to look at a stock today that I haven't looked at in a long time. That is STNE StoneCooo. This is like a payment processor in Brazil. And I first learned about this one probably 5 or 6 years ago because I guess Warren Buffett had traded it. He's not in it anymore. And so I figured that I would take a look at it again and see kind of how it was doing. So we'll do three things. We'll look at the latest earnings, the current valuation, and a few other things to consider. So the latest earnings was on May 14th. And if we look at the revenue, the income statement first, you can see there is a pretty significant decrease in their revenue year over year. And then everything else is pretty much flat. Though that's not true actually, because while this is down 240 million, the financial income and other income actually more than make up for that. So then they're getting a total growth. So still growing. That's great. The total cost for that looks like it went up about the same amount as the revenue did. So kind of a wash there. And then you can see the profit before income taxes is basically the same, basically totally flat. So there is this deferred income tax and social contribution. I want to say this is the selling of their links asset. I'm not sure though. I'd have to double check that, but that's definitely a one-time thing, and that's what's throwing this off. There's kind of some of these below the line items, but besides that, nothing really to note here. I do want to check their debt real quick. They do have a lot of, yeah, okay. Well, I guess because of how the industry is, the debt's going to be kind of hard to read because they're going to have a lot. But if we just look at their cash, you see they got 6 million here. So they got, that is 6 billion. So 6 billion in cash. They have plenty, a lot of short-term investments. So they have plenty of stuff here. That's a lot long-term investments. So pretty healthy, and kind of growing. So, healthy company. The interesting thing about this company really for me is the valuation, because you're looking at a company that overall is pretty healthy, and it has a market cap of 2.75 billion, which makes the PE ratio like 4. The PEG ratio I think is like 10 or whatever. So this is an extremely low valuation. Largely because I think the revenue growth or the revenue forecast. And we can ask, we're going to try out Gemini rather than ChatGPT. Why is the PE ratio for stock so low? I want to say it's like a forecasted revenue growth that's pretty low. Yeah, median PE ratio for their industry is 15 to 30, and they're at 4 and 6. But there's a few things. Yeah, deacceleration fears. Yeah, so two-year growth is expected to cool significantly. EBITDA growth is expected to flatten. Let's see. There's a Brazil risk. The market is discounting it for. And then software and fintech sector sell-off is also a part of it. So they also gave out like a huge one-time dividend of $2.53 for the Lynx asset. So something for that. So kind of basically growth is slowing, growth is going to be flat, those sorts of things, but very, very low valuation. And then it's right now below the 50-day and 50-day moving averages. So pretty low. So yeah, that's probably the most interesting thing for me about this stock and why I kind of wanted to look at it. They're showing you their price to sales ratio here. This is in Brazilian reals. by the way, not US dollars. And then the earnings per share is about what you would expect, and then they don't normally do dividends. So, huge kind of valuation thing. I did see something too about there's some sort of lawsuit that Visa's trying to go through with StoneCooo right now in Brazil. Brazil is doing something and Visa's trying to fight it. Is Brazil, what lawsuit or government law is Visa or MasterCard fighting the Brazilian government over that could be involved? There's something. Okay, picks. Brazil's incredibly successful government-run instant payment system. The U.S. government's recent trade investigation into Brazil on behalf of Visa and MasterCard. Okay, so U.S. government is doing an investigation into Brazil for these two companies. The dispute escalates a direct conflict between the private U.S. card networks and the Brazilian central bank, and StoneCooo is right in the crosshairs. Okay, so Visa, MasterCard accusing Brazilian government of anti-competitive practices. Government mandated that all payment institutions in Brazil with over 500K account holders must offer PIX. Okay, because the government subsidizes infrastructure, Visa and MasterCard claim it creates an unlevel playing field that intentionally starves private card rails of transaction fees. PIX now processes more transactions than Visa and MasterCard. Okay, so this is what we want to know. How is StoneCooo involved? Okay. Historically, StoneCooo makes its money on the merchant discount rate, the fee charged to merchants when a customer swipes Visa. Okay. When a transaction moves from a Visa credit card to a PIX QR code, StoneCoo's take rate and processing margins shrink dramatically. If Visa and MasterCard lose this fight and the cards continue to bleed market share to PIX, StoneCoo's core acquiring revenues will continue to face heavy pressure. So, that's something to watch. This kind of lawsuit and see what happens there. So, another kind of add-on to watch there. I want to see are insiders buying Stone stock? Okay. Yeah, CFO bought some. Got it at a pretty good price too. Corporate share buybacks. And then CEO stock equity boost. Okay. So this one's interesting. I haven't looked at it in a long time. It's probably pretty flat and boring for a lot of people, but maybe some people would think it's interesting. I think the analyst price target's like $20. If you were to do like various valuation things, like what is the valuation for Stone based off of the discounted cash flow model? If you were to do like these basic things, I think this stock's considered like a classic like Peter Lynch type stock. But yeah, so it's saying 15 to $20. And then here's an aggressive one, saying like $60. What is the PEG ratio? Okay, yep. What is PEG ratio? That'd be a little more clear here for Gemini. Oh boy. Yeah, look at this, like 0.1, 0.2. So, yeah. So yeah, this is like your Peter Lynch super value kind of stock. Now that doesn't mean that it's good, because let's be honest, when has Wall Street cared about value stocks? It's been a while. But I like to give you a little bit of everything, and so this is one of your value stocks. Hopefully you guys enjoyed this. If there are things that I don't know about it, I'd love to hear more, and I will see you guys in the next